Good afternoon, everyone. My name is John Matthew from the Impact Innovation Group, and we are working with the Queensland Government to deliver a series of webinars on behalf of the Office of Small Business. And we're just having a few people log in, so that's great. Today's webinar topic is Business Basics, a different way of working with your accountant, with our guest presenter, Neville Hughes from GTC Financial. Now, just while we wait for other people to connect into the webinar, I'll take you through some of the tools we'll be using for those who haven't been either in a webinar or are familiar with the Citrix GoToWebinar systems before. So I'll bring that up. So here we go. Your screen should look like this: a slide in the center and a control panel or dashboard on your right. This control panel will collapse automatically when you're not using it. So keep it open and click the View menu up the top and uncheck the Auto Hide control panel. During the webinar, we might ask you a question, and more than likely, Neville has told me that he will be asking for a lot of audience participation for this webinar. We ask you to raise your hand within this webinar function, and to do that, just click on the little hand icon on the side of the control panel. Remember to lower your hand afterwards by clicking on the icon again. There's also the opportunity for you to ask questions, so the webinar can flow smoothly. We can stick to the time allocated. We prefer that all these questions will be answered at the end. But feel free throughout the entirety of the webinar to ask as many questions, and we'll get to them at the end. Just so we know the function is working, can everyone just raise their hands by clicking the icon just to test it out? Yep. Looking like we can do that. That's great. Move on to the next one. Now, we won't be using this function, but if Neville has the opportunity in the near the end, we will be asking for a poll as well. We also have some handouts for you, which you can access and download by clicking on this section here. Neville has kindly agreed to share his slides with us, where you can access it. And now, please don't forget that these documents have been specifically prepared for you to better understand today's webinar. So please download them either now or during the webinar, as they will not be available after the webinar ends. So now it's time to bring on our presenter, Neville Hughes from GTC Financial. Neville, welcome to the webinar.
Thank you, John. How's everyone today? Actually broadcasting this from sunny Gladstone, and it's a very beautiful day here. So I would presume that most of the people here either have their own business or are contemplating having a business. So today what we're going to cover is just a different way of working with your accountant. And I would suggest if you don't have an accountant, you should be getting one. Just to cover off who I am. So I've been an accountant, have over 30 years experience. I'm also a financial planner. The first sort of 15 years of my life was spent working for a large company called CSR in their building materials area. But for the last 20 years, I've actually owned my own accounting firm. And I really love it because I believe it's a privilege to work with small business owners. And they take you into their lives and you work with them to help achieve their goals. It's much more personal than working for a large organisation. So today, the webinar is broken up into two parts. Firstly, we're going to do a presentation on how you can work with your accountant to achieve the results that you want. And then we're going to actually do a more practical session, which is a very simple planning workshop using a tool we call the growth equation, which will show you how you can grow your business. And it'll help you understand what drives sales, profit, and cash flow, which are the three key elements of business profitability. So, okay, And again, there's a general advice warning there that this is very general information. I suggest you need to get advice before putting any of it into action. Believe it or not, accountants do actually have a bad name, and it has nothing to do with tax avoidance, and it's not even anything to do with being boring. We cop a bit of stick because people don't believe that we're proactive enough. Accountants are often seen as being very reactive, and that's partly because a lot of accountants are quiet, they're not outgoing, and many find it very difficult to speak out, even though they might have lots of good ideas on how they can help your business. Unfortunately though, business allows its owners very few chances. So if you have an accountant who is not coming to you with ideas, then I suggest it's really important for you to drive that relationship. You need to make it very clear what you are looking for from your accountant. And if things don't change, then I suggest you need to change your accountants. Remember, it's your business and it's your neck on the line. And ultimately, an accountant should be able to provide you with an agreement of some kind. We call them financial management plans. That's the term that we use for them here. And it will set out the services that can be provided over a year, and should be able to give you a fee estimate of being able to carry out those services and when they're going to be done by. So strongly suggest that is in writing. Most people associate accountants with preparing a BAS or tax returns, commonly called compliance. But accountants are generally capable of doing much, much more than your compliance work. Certainly to get a university degree, you cover a wide range of topics. But here are a couple of topics that most small business owners want help with. And what I'm going to actually do is cover each of those topics in a bit more detail. But these are not an exhaustive list of topics that you can talk about with your accountant. The options are actually endless. So I'd suggest if you've got ideas of things you want to talk to your accountant about, then get those down on a list and go and see your accountant and start dealing with them. So I want to go through some of these specific areas because they're areas that either we find we have a lot of questions about, or we actually notice things when we're working with a client and we suggest that they should do them. The first is actually their business structure. And the thing that I am going to say is that your business structure, don't get advice from friends, which is very, very common, or family, or research it on Google. There is no one perfect structure that will suit all businesses. And the structures need to be customized for each business owner. So it's really important to remember also that the structure that's ideal for you now may not be the best structure as your business grows or your circumstances change. And the last piece of advice on structure is don't organise the entities, the companies or the trusts or the self-managed super funds. Don't organise them yourself. Get your accountant or maybe a solicitor to help you with that. We've come across situations where people have set things up incorrectly, and it often costs more money to unwind those structures than if they were set up properly in the first place. Another big area that an accountant can help you with is choosing the right software for your business. And again, the choice of software is endless. So my advice is to meet with your accountant and choose an application that is specific to your industry. Have multiple amounts of software out designed for specific industries. for hospitality industry, for tyre and mechanical businesses. There's lots of it out there. So find an application that is actually specific to your industry, and also that software or application will link seamlessly to one of the well-known brands of accounting software. Because ultimately you'll need to prepare a BAS. Every quarter you'll need to be able to prepare financial statements and the tax return. So having an accounting software, a reputable brand like MYOB or Xero, two very, very good brands, is absolutely essential. And if your application links seamlessly to that, it'll save a lot of re-entry of data. My other recommendation is that you go cloud software rather than desktop. Now, it can be a bit controversial. We have clients who struggle with internet connectivity or slow internet speeds, but cloud software has revolutionized the way accounting is done across the world. And what it means is that you can have real-time data, automatic bank feeds. Your accountant can actually help you solve little accounting problems by logging in at the same time that you're there. And it also will allow them to be able to keep a track of what's actually happening in your business and let you know if they see problems ahead. We're very passionate about planning in our business, and we believe that every business should have a business plan. Like accountants, business plans have a bad name because many people see them as really complex documents. They're big and thick. They're prepared once and they're then put away and never looked at again. Now, there's a lot of work being done around the world on business planning, a lot of information out there. And many business plans now are concentrated to one page, a one-page plan. And the other thing that's really important about business plans, particularly one-page plans, is that you should make them action-based. So they're more like an action plan rather than a big fluffy document that's never used again. And linked very closely with a business plan is a budget and a cash flow forecast. And we hear a lot of times from business owners, okay, if I prepare a budget or a cash flow forecast, it's going to be out of date within a matter of months. And I accept the fact that will be. But what it does do is it gives you a really good reference point. So it's more like dealing with a GPS. Yes, you're moving, but you know where you want to go, and you know whether or not you're on track. The other thing that's really good about preparing a budget and a cash flow forecast is that if you do it in conjunction with your accountant, so you're actually there working with them while those documents are prepared, then it'll give you a greater understanding of your financial numbers and what drives them. And as I said before, if you've got a cloud-based accounting program, you can put those budgets and cash flow forecasts into those cloud-based programs, and you'll know pretty quickly whether or not you're on track. A good accountant can also make sure that you have a good finance structure, and that's really important. Now, banks will often come to you with a proposed finance structure, an overdraft or a long-term loan of some kind that's secured against property. The good thing, though, is that the accountant will actually be working for you. They're not working for the bank, and they can help you assess what the bank's recommending and whether or not it's in your best interests. The key piece of advice for finance structures and using finance is that not to use your short-term finance, such as money in the bank, a credit card, or an overdraft for purchasing longer-term assets, like plant and equipment or motor vehicles. We've often seen that done. And if that's actually done, it'll put your business under financial pressure, unless you have a lot of cash reserves, of course. Think of your accountant as a teacher. So they, as well as doing your BAS or your tax returns, they should be able to explain to you what's actually happening in your business. And they should be able to help you interpret your financial statements. And the best way to get information out of them, because they don't know what you don't know, is to ask lots of questions. And we always say to our clients here, remember, the only silly question is the one that's not asked. And as I said before, monitoring what's happening in your business is a lot easier if you actually set up your accounting in the cloud. So there's some great systems around now that will keep a track of what's happening in your business and alert you to if there's some concerns. And if your accountant is actually working with you on that, then they'll let you know if you're getting off track and can actually help you work out what changes you need to make to get you back on track. Look, there's a few final points here that I'd like to go through before we actually move into the workshop part of this webinar. A key role that an accountant can play is to be your advocate. And by that I mean that they are the person, your ally, who stands with you when you have to deal with large organisations. And the two common ones are banks or the tax office. But they might also be your main supplier, or if you operate a franchise, they might be the franchisor. Your accountant is your ally. They understand what's happening in your business. They can explain what's happening to the bank or the tax office or your major supplier. And they can make sure that the negotiations with them will put you in a situation that doesn't put your business at risk. Excuse me for a minute. To be able to do that, though, it's really important that your accountant deeply understands your situation. I'm not talking just about your business. I'm talking about your personal situation as well. And if they understand what your long-term goals are and their role is to help you achieve them, then they can make sure the advice that they give you is actually consistent with your long-term goals. Now, the final point you might think is a bit controversial, but your accountant's not there to just be a yes person. If they're doing their job correctly, they should raise any concerns they have. If they see you off on a tangent doing something that they consider is risky or could put all the hard work that you've put into your business at jeopardy, they need to have the courage to be honest with you and express their concerns. Because if they don't do that, they'll stand by and watch you lose everything that you've worked hard for. So it's really, really important that they do that. Before we move on to the workshop, is there any more questions that people had of what the information that I've provided so far?
So if you have any questions, ladies and gentlemen, please type them into the chat portion. See if we can pick any up. Looks like you're good to go, Neville.
Okay. So the next part of the workshop that we're doing is actually doing a very simple planning process using a tool called the growth equation. And we're going to look at a fictitious business called Cloudy Bay Fine Foods. And that business is owned by a lady called Nigella. So it's a 5-step process as we go through the next part of this workshop. And the first step is going to be explaining how this tool called the growth equation works. What we do then is we will look at each input of the growth equation and come up with a number of ways of improving the number that we've got there. And I'll be asking for suggestions, and John will relay any answers to me. If I don't get any, I'll make some suggestions as we go along. What we'll then do is, as we enter those inputs, we'll actually see how they change the numbers. And then what we'll do is we'll agree the new number that we want to achieve. And I think what we'll do there is ask for a poll. If we're all happy with that, we'll raise our hands. The next step is then to do a bit of a reality check, because if we can go through and enter numbers, and that's the easy part of a business planning process. But we also need to do a reality check. Is what we're looking to achieve realistic? And we'll make that call today. And what I've said before is that we need to write these actions down, otherwise we'll forget them. And what we'll do, we'll see at the end of this process, is that we've drafted a very simple action plan on one page. And we'll go from there. Good. What I'm going to do now is I'm going to go to the growth equation, which I've actually set up in a simple Excel spreadsheet. Now, this is a tool developed by an entrepreneur called Rob Nixon, and Rob runs a business called Panalytics, and we actually subscribe to the tools there. So Panalytics is a Brisbane-based firm that's actually going global, so it can happen from Brisbane. So I'll explain how this tool works. So we can see with Nigella, sorry, I've actually just missed a step here. I'll go through and tell you a bit more about Nigella. So Nigella runs a business called Cloudy Bay Fine Foods, and as you can see, we've got some personal information on her. And that's, as I said before, it's important that the accountant knows what their client is going to achieve. And Nigella wants to retire in 10 years, and she wants to earn an income of about $80,000 per annum. That's what she believes she can live comfortably. So that's the goal that she wants to achieve. Now, we won't be looking too much at that today, but it's going to be, her business is going to figure in her achieving that. A little bit more background about her business. This is the key part for us today, though. Nigella's business is growing, and we'll have a bit of a look at her financials to see if that's the case. But she's really feeling under pressure financially. Not sure if any people out there have actually felt that, but we've certainly seen where businesses are growing, particularly if they're growing quickly and they're growing profitably, they can still be under pressure financially. Their overdrafts grow, they struggle to be able to make payments, and particularly with the tax office, they struggle to meet their obligations. So in Nigella's situation, she's in overdraft, and she doesn't know why, and she doesn't like it. It doesn't fit with her longer-term goals. So our job today is to understand her numbers and help her understand them, and we're going to put in place some strategies to help reduce the pressure she's feeling and put her on the way to achieving her long-term goals. So a bit of a look at her financial statements. Expand them slightly. We can see that her sales, shrink this. We can see that her sales have actually grown. So she started off in 2013 and her sales were 491,000 and now they're 775. She's grown the business really, really well, and she's done that by growing her customer base from 350 to 410, and the number of times they're transacting with her from just over 2 times a month to just under 3 times a month. Probably a bit of a concern that we've got here with Nigella is that her profit margin, her gross profit margin, is actually dropping. It was 54%, and it's now down to 42%. And we've got a bit of an understanding why. We can see that her average sale value has stayed the same. I would almost suspect that her cost of sales have actually increased. So therefore, she's not flowed price increases onto her customers. But nonetheless, her profitability has gone up. So she's 110,000, a couple of dips here, but she's got it back up to 137. And she's quite happy with that. Down here, though, a cash flow statement, which is really important. I mentioned before about a cash flow forecast. We believe it's a really important thing to do is to actually provide a cash flow statement for a client. And the reason we say that is because many times a customer will ask, where is my profit gone? You tell me that I've made this amount of profit, but I can't see it in the bank. It's exactly what Nigella's experienced. Her bank account has gone from almost 85,000. It's now in an overdraft of 11,200. We can see that her stock's grown from 8,800 to 30,000. So some of it may be sitting on the shelf. And her days of stock have gone from 14 to 24. What she's owed by her customers, so she provides credit, was 22,000. That's now at 46. And in terms of days, it's gone from 15 days to 20 days. And her creditors, she's paying her suppliers more quickly. So she's was paying them in 15 days. She's now paying them in 5 days. So it's certainly, we're seeing some signs here of what's going on in her business. So what we've done is we've taken that information and we've put it into the growth equation, which we'll now explain. You can see Nigella had, at the end of that 16 year, had 400 customers. She provides really good customer service and has kept them all. She's got 400 retained customers. During that year, she had 20 leads or inquiries coming in. She only converted 50% of them, or 10 of them, into new customers. So that was a bit surprising. So for the year, it gave her 410 customers. They were buying off her 35 times a year at an average transaction value of 54. So if you multiply the 410 by the 35 by the 54, you get 775,000. Of the cost of goods sold, that's the products that she's selling, 58% of her sales went in cost of goods sold. That's why she only achieved a gross profit margin of 42%. And she had business expenses, her rent and staff and all of the other costs associated with running her business of 187,000. And that gave her 137,900 profit. We talked about her stock, debtors and creditors before. So what we're now going to do is work out how can we actually help Nigella. So what could Nigella do to absolutely increase the number of leads or inquiries that she has? Does anyone have any suggestions on how Nigella could do that? John, are we getting any feedback there?
Seems very quiet. I think they're hanging on your every word, mate.
Okay. So what Nigella would probably do there is set up some form of marketing campaign to bring more customers into her shop. So we would suggest talking to a marketing consultant. Here in Gladstone, there's an absolutely fantastic marketing consultant who does work all over Australia, and in fact they do work for QantasLink. They're called Cooper Mackenzie Marketing, and they would probably set up for Nigella a really good Facebook campaign that makes people in her area aware of her specials, aware of her products. What Nigella might also do is get a list of potential restaurants that she could be selling stuff to. So, and then work out a way of approaching those businesses and getting some more. So if she were to do that, how many leads or inquiries would we like to see out of that activity? Pretty still quiet out there, John?
Well, but I'm thinking if we wanted to go probably about 25, 30. What do you reckon?
Yeah, I think so. Let's raise it up to 30. So if we look at 30, and then we said, well, previously she's been converting 50%, but that's only 1 in 2. But even if we sort of looked at that and said, look, if you got 10 more inquiries a year, and you converted them to 15, and even if they bought the same amount of times and the same dollars, you'd increase your sales over looking at 26, almost $30,000, which is quite remarkable. But surely you'd want to be converting more than 1 in 2 inquiries into a sale. So I'm going to take a punt here and said if we could get that up in 2 out of 3 times, let's put 67% there. So if we got 2 out of 3, we could see that she would almost deliver another 9,000 worth of sales per year, which is really good. So that, just going back over what we've just done, so 30 leads, converting 2 out of 3 of them, so she gets 20 new customers. We added that onto the 410, so that's 430. We still haven't looked at the number of transactions per year or the average transaction value, but her sales are still up to 812. And you notice there's another $15,000 worth of profit up there. So it's actually, in a lot of small businesses, you'd be thinking, well, gee, that's a pretty good result. But I think the next couple of things that we do here might really surprise you. So currently, her customers are buying from her about 3 times a month, but just not quite. So I'm going to suggest that she works a bit harder on her marketing and gets people to come in just a little bit more often. We can see how the profit's climbing. So it's added another 10,000 a year doing that. If we go back to these financials that we were looking at before, we were really concerned here that her average price had not increased. So that's caused her margin to decline because the cost of all of her products have gone up. So we're going to suggest a couple of things here to Nigella. What we're going to suggest is that, Nigella, you need to increase your prices. Now, a lot of clients get really concerned when we make that recommendation. They're worried about losing all their customers. But if you think about a 5% price increase, and in Nigella's case, that's probably going to be about $2.70 on a $54 transaction. A 5% price increase is not going to be much. Now that's $5 on a $100 sale. It's hardly going to make or break. Now there'll be some products that she can't sell for 5% more, simply because competition won't allow her. But there may be other products that she sells that she can increase significantly higher than 5% to be able to get the 5% overall. So that's one way of increasing the average transaction size. The other way is to use the McDonald's approach, and I'm going to joke here by saying, would you like fries with that burger? Or would you like a drink with that Big Mac? Because that's a technique called cross-selling. And it's really important for her sales skills to be able to work out how she can increase the average transaction size by cross-selling. Now, she can increase the average transaction size through cross-selling or with a price increase. This will make a significant difference. And I'm going to do that now. So what I'll do is if I increase that average transaction size to $60, so we're seeing now 836. We're seeing a profit increase to 163, which is 25,000. Let's have a look at this one change and how big a difference it actually makes. So sales are now 929,000. Profits now over $200,000. A change of 65,000. Very significant difference. Getting your price right and having the courage to increase your price will make a significant difference to the bottom line of your business. It's one of the things that we see all the time. People don't necessarily have the courage, or they lose track of what the cost of the things that they're selling. So they make sure they keep track of that and they have the courage to increase the prices, and also have the sales skills to ask what other things would a customer like with what they're buying. Will make a big difference. So at this point, what we would normally do with a client that we're working with on the growth equation is we will ask them, is this number realistic? How confident are you in achieving this number? At that point, we're going to zip. We're going to ask you to put your hands up. If you're confident, if this was your business, are you confident in achieving those numbers? John, could you get people to raise their hands if they believe they can achieve these numbers?
Yeah, of course. So, ladies and gentlemen, if you could hit the button icon to raise your hand if you agree that something that would be feasible in your own business, or yep, Samantha thinks so. Eliza thinks so. Yep. Yeah, looks like we have two. Yeah.
So either we have the other two might be a bit shy, or then I guess let's say if Samantha and Eliza put their hands down, we then who believes they wouldn't be able to do something like this in their business?
Yep. If you can't, yeah, if you don't think this is completely realistic at all, raise your hands now. Well, people think it's realistic, which is a positive sign.
Good. So once we've gotten to the sales numbers, we then start to have a look at the cost side of the business. We often find that our clients are nervous about talking to their suppliers about the price they're paying for the goods that they sell. A really good example, a client of mine up here they did ask, they couldn't negotiate a higher price, a better price. So what they did was actually go to an alternative supplier. So if you're finding that you can't negotiate better prices or more competitive prices with your suppliers, then have a look for an alternative supplier. So in Nigella's case, she might be buying a lot of her goods from a particular supplier. She goes back to them and says, I'd like to organise a better price, so I think you should be more competitive. And if they don't do that, she should then look around for an alternative supplier. What I'm going to suggest here is that she can get her cost of goods sold down if we just aim for something really simple, like let's aim for a 3 or a 5% reduction in the price she's paying. So if we said here, the cost might be 53%, for example, a 5% benefit. Let's have a look up here at our profit. So 202,000 and a change of 65. So let's have a look. We'll make a change down here to 55%. Really big difference. As you can see, that has actually increased by another 30-something thousand, or $27,000, which is a massive increase. So now the profit's over $230,000. But I've probably got a little bit of bad news for Nigella. I've been asking her, well, Nigella, if your business is now turning over $929,000, and some of that's because you've increased the prices, but your volume of transactions is higher, do you think that your current staff levels can actually cope with that work? Or will you need to put on more people? Nigella will then soon realise that, well, I can't actually cope with all that work by myself, and I will need to actually add more people than I've currently got. So, and also the marketing campaign that Nigella's entered into, that didn't come for free. So basically what I'm going to say to Nigella is we need to allow some additional expenses there. I'm going to be cheeky here as well. I'm going to suggest that Nigella's going to need more accounting support to make sure that we keep her on track, and also we make sure that the numbers that she's expecting to achieve with these results are actually happening. The other thing I think she'll need, if she's now earning $230,000 profit, she's going to be needing a bit more accounting support to do tax planning before the end of the year to make sure that she doesn't over the highest marginal tax rate, so she'll lose a bit of tax if she doesn't do some tax planning. So what I'm going to suggest here that we increase the expenses a bit. So if we increase the expenses, just say by another 13,000 to take it up to 200-odd thousand. So far what we've done is we've increased her profit from $138,000 to $218,000, so an increase of $80,000, which is a fantastic result. And by doing that alone, we will take the pressure off Nigella's cash flow. So her overdraft will go from an $11,000 overdraft, and she'll be back in the black to the tune of $54,000. So she'll be $65,000 better off. So can we get a show of hands here? And if that was your business situation and you were in an overdraft, would you feel better if you knew how to improve your numbers like this? We getting any response, John?
It looks like, yes, definitely. It looks like it's, yeah. People are keen on that idea.
Good. So there's a few more things that we can do with Nigella. So if we were looking at her numbers, there's a few questions that I'd like to ask her. And we ask this of all of our clients. Nigella, you have a business that's turning over fine foods, and I appreciate that some of those can stay on the shelf for a while, but most of them should be turning over quickly. So why do you have 24 days of stock? Okay, when in fact, most of your stuff is turning over almost on a daily basis. So I'm going to be suggesting to Nigella that she should be reducing that. So if we reduce, I'll keep this in sight up here. So if we reduced her stock from 24, which is a bit over 3 weeks, down to 2 weeks worth of stock, that adds a significant amount of money to her bottom line. It's another $10,000. The other thing that I found strange about Nigella's business is that she has 20 days of debtors, which are her customers owing her money. And that's $46,000. As we've grown the business, that's increased if we don't deal with these days. Now, most of Nigella's customers are probably mum and dad's coming in and they're paying with a credit card. So this is likely to be the restaurants and cafes that she's dealing with. So she's offered them credit. So what we'd be doing is working with Nigella and saying, look, you need to stop offering credit so easily. Find ways of actually getting your customers to pay you more quickly putting in stricter credit terms. So don't allow people to be paying you in a lengthy period of time. And making sure that you put a credit application process in place so you can actually do an assessment of whether or not these people have got the financial capacity to pay you. And if we were able to do that, I think we could get Nigella's days down to 14 as well. We could probably do it better than that, but let's just start by 14. So again, I want to go up here and say, right, we've gone from 11,000 to 68,000. Let's see if we get these down by another 14 days. What does that actually do? Goodness, that's actually taken her bank account up to nearly 86,000. So from an $11,000 overdraft, she's almost added $100,000 to her bank account. Now, I'd be excited about that. I wouldn't really need to do much about her creditors or her suppliers. She's paying them very quickly, and that's probably to get special settlement discounts so that she can get a discount for paying early. So I wouldn't tinker around with that and lose those discounts. So at this stage, we're seeing Nigella with a profit improvement of from 138,000 to 218,000, which is a change of $80,000. And her bank account has gone from an overdraft of 11,000 to cash in the bank of 86,000, an improvement of 96, which is really good. Now, her longer-term goal is to be able to retire and earn an income of $80,000 a year. So the value of her business, what she can sell her business for, is going to play an important part of that. So if we look, businesses are normally valued as a multiple of their profit. So Nigella's business was worth probably around $345,000 plus any stock that she might have had on hand at the time. A new value for her business based on the improved profitability would be $545,000. Now that's still not going to deliver Nigella $80,000 a year. But out of that $218,000, she could certainly maximise her superannuation contributions or set aside, make other investments. So Nigella can use that additional profit and cash flow to be helping her achieve her goals of financial independence in 10 years. So all up, we've done some great work for Nigella. Well done, guys. What we're now going to do is, so we don't lose all of that information, we're going to actually go back and put this into an action plan. And I've prepared one earlier. So if we can just go down here. A little bit of tinkering to get where I am. Good. So can everyone see the action plan that we've prepared for Nigella? So it's really important when we do a growth equation with a client, we don't lose all of those actions. So what we've added a few more on here. So I've said to Nigella, look, get that Facebook marketing campaign underway. I would be suggesting to her that she use Cooper McKenzie here in Gladstone to go and do that. And they would, one of the things that they would always do is identify your ideal customer and your target list of potential restaurants and start the marketing campaign to them. We would find a place that could teach her to do better sales, so that would improve her conversion rate, and that would lead into cross-selling, being able to then find out what a customer's looking for and making sure that she can sell additional product to them. Contact her suppliers for better prices, and also monitor stock better to reduce losses. Now, in food businesses, we see a reasonable amount of wastage. In other businesses, we see theft. We even see it in electronic businesses where customers have toys or games that have gone out of date, and they're not able to sell them, so they have to sell them cheaply or they scrap them, and that affects their gross profit margin as well. As we said before, we're going to set up a system that that monitors her POS. So we recommend a program like Counter. It actually links in with MYOB, and then we can then set up a monitoring plan to make sure that she stays on track. With her stock, Counter allows her to set the stock orders and make sure that she's not over-ordering, and we can then organise a sale to sell the slow-moving items that she might have on stock now. And we're going to set up a regular follow-up for her debtors, making sure that they don't get out of control, and set up this new credit application process for Nigella so that she knows the new customers will be able to pay their bill when she sends it out to them. So, good. So, what I'm going to do now is go to the last slide and basically let you know that if you here are my contact details, that will come out on the slides that are provided as part of the handouts. And if you liked our presentation, please go onto Facebook, find GTC Financial and give us a like. We'd really appreciate that. We have a goal of increasing that every day. And if you want a copy of the growth equation, if you think this is useful for your business, then my offer to you is send me an email and let me know that you would like one, and I'll actually email it out to you. Now, we will say that we do actually lock a lot of cells so you can't change it, but all the input areas have been unlocked. Johnny, it might be an appropriate time here now to see if anyone has any questions as a result of this.
Thank you very much for that, Neville. Really appreciate you sharing a whole bunch of really interesting insights as to how to set up and manage your finances. So thank you very much for that. So we do have some questions, and I do encourage, if you do have any other questions for Neville, just to write them in the chat as we go along. So the first one is from Jennifer. She says, you said it's vital to find a proactive accountant. How do you find one without having worked with them prior? How do you search for them?
Yeah, okay. Look, there's actually a group, a company called Panalytics, and it's a Brisbane-based company, as I said before, and we're a member firm of that. In fact, it started off as Proactive Accountants Network in 2006. Now we've been a part of it since then. So go onto there, and you can find a list of accountants who are part of that. And to be part of that would really imply that the accountant is actually proactive. But there's obviously the long-term relationship that you have with an accountant will determine whether or not that accountant's actually as proactive as what they're saying they are. Now, just remember that the accountant doesn't have to be living next door to you. You know, we have clients. We actually have one client in Sydney, but we also have clients. We have Gladstone-based. We have quite a few clients in the southeast corner, and we have clients out on the Central Highlands as well. You know, actually helping a tyre and mechanical business out there convert over from a very, very old system to another, a cloud-based system, so they can keep track of numbers better. Yep.
Yeah,
Okay,
that kind of leads on to the next question. Yeah, Jack needs to know, based on that, what software would you recommend that we should be kind of integrating into my business that a proactive accountant would appreciate or utilize better?
Yeah, sure. Could you ask Jack what business he actually has?
Yep. He says it's a cafe.
So there's a really cool program called Counter, Kounta, and it's designed specifically for cafes. And we're actually working with a client of ours here called Savour the Flavour, really, really cool cafe at our Botanical Gardens, to upgrade to Counter, and that links with, I think, with MYOB definitely, but also with Xero, and that allows your accountant to link in and see what's actually happening. Now, if they're a member of the Panalytics group, there is also the Panalytics software that which we have, and we link the software together, and that's why being cloud-based is so good. Then effectively we can keep track of what's actually happening in that business, and we set up little traffic lights so we know that if their sales are dropping away or their gross profit margin is dropping away or their stock is going up, then that sends us a little alarm bell. So then we will send an email out to the client saying, I've just noticed a couple of things happening in your business. Is everything okay? Do you want us to have a bit more of a look? So yeah, and a proactive accountant will be able to do that for you. Counter and Maya or Counter and Xero will actually help that.
Okay. Courtney would like to know, how do I gauge how much I should be budgeting for marketing activity versus other business development activity within my business?
Courtney, what sort of business do you have?
Agriculture.
Okay, that's interesting. So, Courtney, are you selling directly to outlets? And agriculture is a very wide term. So,
Yeah.
Are you fruit and vegetables, or are you?
She said
meat?
she's selling directly to wholesalers.
Okay. What sort of marketing are you looking for? Are you looking to grow your list of wholesalers, or are you looking to do something different?
Ideally grow, but it's just a startup at this point.
Okay. I don't believe you would need to spend much money on marketing. I think the really important thing that you need to spend the money on is developing a database of who the potential wholesalers are. To me, that would be really, really an important thing that I'd be looking at. So find out who all your potential wholesalers are, and then I would be suggesting to get some materials to show what is your unique selling proposition. Is it the quality of your produce, or are you selling different kinds of produce, or you might be able to deliver it more quickly, or whatever. But that's what I'd be spending the money on. So get the database of who your potential customers are, the wholesalers, and then the materials for marketing are just making sure that they understand why you're different to the other suppliers out there. I just want to say that agriculture is going to be an industry of the future. It was an industry that built Australia, but I believe it's going to be an industry of the future. We're seeing exciting things happen in central Queensland with agriculture, and I know I have family on the Darling Downs, and they're seeing exciting times for agriculture as well. It's coming out of the shadows of mining. It's actually an exciting time to be. I grew up on a farm, so that's why I'm a bit passionate about it. So, yeah. The other thing that I think will be really important is making it easy for your customers to buy from you. So if you've got a system that allows them to place orders, or that you can directly market to them and let them know what produce is available, or maybe in advance of when that produce is going to be available, then that's what I'd be spending some money on. Yeah.
Okay. I've got one last question here, and it kind of harpens back on the final point you made. Wouldn't increasing prices cause small town businesses to appear uncompetitive, given the market is already really difficult to remain competitive in?
Yeah, look, there is some truth to that. I agree. But fuel goes up and down all the time. And it's really important, as the cost of your inputs go up and down, particularly go up, Everyone's heard on the media the cost of electricity. If you are employing staff, then the cost of your wages will go up with CPI increases. So it's really important. If you are not able to reflect the cost of your inputs in your own prices, you will eventually be squeezed out of business. So you've got to work out clever ways of actually doing that. So and I mentioned before that my background was in a big company called CSR in building materials. And our major customers knew the price of plasterboard and insulation to the cent. And if we moved up, we would get absolutely smashed. So what we did was looked at all the other surrounding products that weren't so price sensitive and made sure that we increased them more wherever we could to compensate for the fact that our major product lines couldn't be increased very often. So that's how we did it. And so what I'm saying to you is look at your total range of products that you're selling and start increasing and do an experiment on that. It's not all or nothing. Just start increasing one or two items and just see what the reaction is. Will the sales drop off by as much as you think? So yeah, have a look at that.
Thank you very much, Neville. Okay, we're coming on to the end of time. So thank you everyone for attending the webinar. Remember to download the handouts before you exit. This webinar is being recorded and will be uploaded to the Impact Innovation Group YouTube webpage should you wish to view it again. Thank you very much for tuning in, and have a great day, everyone.
Thanks, John. Thanks, everyone.
Thank you very much, Neville. Take care, everyone.